Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, which should now, all being well and good, be aligned with UTC. So, how are we all doing today? I see some people in the chat already. Good morning, Bern, my friend. Good morning, everybody else that's tuning in. Give some people a few more minutes to come and get involved. What have we got from Bern this morning? So, BC, if you have any knowledge about the quarterly cycle theories, okay, so days theory. Do you know what? Actually, my friend, it's not. It's something that I've read about, but something that, to be honest, unless I really, really have studied something really in depth, then I don't. I don't really like to comment on it because there's so many other people out there, especially with elements like this, that would be far better placed than I. However, I know Burb is incredibly knowledgeable. Jimmy, obviously all of the TA team there, and all of us have our different areas of specialty. So I'd recommend just popping into the chat on there, mate. Pop that in. I'll have a little chat with them, and then we will get rocking and rolling. Could actually, by the look of it, yeah. I think maybe Monday things are going a bit slow. Viewers maybe, but we also, it feels like weeks since we've seen Kelly. So I'm about to contact the British Embassy over in New Zealand, I think, and get them to put out some kind of some kind of message. We miss her. Good morning, Whack. There we go. So maybe it's two-person session now. No, I think we've got about 15, 20 people, kind of some sitting there in the background. But anyway, it's great to see you guys. If you are new to the stream, very much welcome. It's really, really good to have you here. And obviously for all you legends that tune in pretty much every week as well, it's great to see you all. I was just saying, Whack, I think we're going to have to put an APB out on Kelly at some point soon. I think it's a couple of weeks now since we've heard from her. So obviously sending lots of love and well wishes, and hopefully she's somewhere tropical, enjoying a well-deserved break away from work. So, look, guys, I want to try and keep this session a little bit punchier, right? I appreciate the last couple of weeks where they've been very education focused, really kind of spun them up into some really long sessions, right? So it's I just want to make this one a little bit punchier, and I thought actually what could be really, really good or helpful is looking at a kind of a top-down approach. So if you've got any coins you want to look at, a lot of altcoins, bits and pieces are kind of popping off and whatnot, aren't they? And obviously BTC, which is, I've got the 4-hour chart up here after sharing my thoughts. Obviously, we release a Bitcoin report every day at the Nest, which is written by different analysts. So it gives a really good kind of cross-section of the market from different people's areas of specialty. So for me, obviously, where I'm much more of an intraday trader, my thoughts on the market were, well, I'll show you. So, Marcelo, good morning, my friend. Simon as well. Lovely. And yeah, of course, mate. Let's take a look at that. Let me just pop that down. So, of course, my friend. So we can do that. Let's have a look at ANKR. So just super quickly, I'm not going to kind of go over the educational stuff because I appreciate most streams I kind of spend the first 15, 20 minutes going over the core concepts. Now, if anybody is of interest, then I go over it on almost every other webinar. You can find them on the Burb Nest YouTube channel. You can find them under live, under any that are down there as BC Richfield. So as a price action trader, what I'm looking for really is just market efficiencies, inefficiencies, and liquidity sweeps, right? So old highs and old lows, to be attacked, or fair value gaps that give us our points that the market looks to rebalance. So on a shorter time frame perspective, I just put out in the report last night that, looking at this as our kind of dealing range, which we'll look at on a lower time frame, will make a lot more sense. This here, let me just get rid of this for a minute. This here is the fair value gap that I'm most interested in. As I said, I think we get to Monday morning. I think as long as we've held this, we don't get the close below it, right? If we got the close below it, it would be a sign of weakness, right? So just to really quickly go over the principles, for me, the way I'm trying to keep the market simple and easy to understand is that once we go for, actually, let me draw that in with something a bit more visible for you guys and cleaner. Once market goes and takes liquidity, right? So in this case, we're looking for highs to be taken. So we can notice here when price takes this high, So it's swept a higher, which is external liquidity, right? External range liquidity, highs and old lows, right? Once we take that liquidity, the expectation is for price to then rebalance a fair value gap or come down into an area like an order block to find support. Henceforth, then building a structure. Okay, so running liquidity from the high, rebalancing this, running liquidity from the high, and then looking to rebalance again. Okay, so what we can see that we had here is we can see price came up, took this high, rebalanced this fair value gap. So that's when I'm saying that I don't want to see a close below this. If, let's for example, this candle, which looked like it was going to, if we got a close here, a bearish close, I'll just do that in red to signify that that's what we'd be looking for, or actually even better, just in black to make it look like that candle has closed below, then the expectation is for price to start seeking liquidity below these lows, right, for a deeper corrective move. So it's quite a simple process, but actually what you can see is how powerful it can be. Now, obviously, the higher the time frame, again, is what we're kind of looking for here. So we would decant this from looking at a weekly to a daily to a 4 hour and hourly. Sometimes with crypto, where it can be that extra little bit volatile, the 4 hours are really, really good kind of barometer. So what does this mean at the moment? Well, I'm still a little bit suspect of this, right? And I'll just tell you as for why. Obviously, we can see here that we've been in this big consolidation right now. Yeah, we are kind of forming a flag as well. Again, I'm not a pattern trader, right? For stuff like that, there's some amazing people out there, people like Axel Kaibar, who actually we're going to have at our Congress event again, which I'm really, really excited about. Just a real absolute superstar when it comes to pattern trading. So I'm just drawing these in roughly now. Typically, when you would draw things like this, you can find the line of best fit if you're looking for the areas of liquidity, or you want to be anchoring them to these wicks and trying to violate as few of the bodies as you can. However, for me, if I'm looking for this as a point of contact, and I'd probably move this actually a little bit more up to say here, right? And then probably down there a little bit so that you've got the contact through these bodies here, the wicks, you can see respected here, respected here, respected here. Deviation climbs back inside, comes back up. Now we're kind of retesting this bottom line again, right? Now this would typically, in this kind of formation, be looked at as a bear flag, okay? So what that would mean is you're looking for price to kind of compress within here, which we've got. Yeah, and then you quite often get a fake out move to this side before price comes down, makes the real move, okay, and then looks to sell off. I'm not saying that the market is bearish right now. It's not. The market's incredibly bullish. It's been showing a lot of strength. But purely from a day trading perspective, I'm looking at where I can get involved and where I think the institutional order flow is going, okay? Julian, good morning, mate. Good to see you. So without kind of going any more on that, that was my thought pattern on that. Okay, so I've done this on the 4 hour, which has been shared across. And actually, let me just show you very quickly when we zoom out to our weekly. Okay, so this is actually on a slightly lower time frame, which we're going to look at here as well, right? But what we can see are the same principles here overlaid. Okay, key level here for me, that was capping the market. Price failed to close above it all the way to here. I mean, look how clean that line is, right? We can see the bodies respecting that, which is why for me it's really, really important that we're seeing kind of body closes. Also, this being, the dealing range, certainly in my opinion, anyway, on a weekly scale, we favour longs below here and shorts from up here. Doesn't mean that we just blindly short up here, but it does mean that the bias that we had intraday last week, which was very, very successful, was the fact that because we were engaging with this weekly fair value gap, that we're actually looking for these corrective moves back lower. Now, the reason for this is you see here in the trends, price, as we've said, is reaching for old highs and then looking to rebalance in the form of fair value gaps. So let me just show you a quick example here before we move on to ANKR. So you see we've taken out this high here, yeah? And almost these relative equal highs as well. So as we've done that, our expectation then is if we're going to be bullish, is that price will then look to rebalance a fair value gap, right? So as price breaks this high, this candle closes, we get this fair value gap form, which is here, all right? Now, what you'll notice is as price comes up, our expectation is for this to be supported and then move towards these highs and ultimately higher up as well. All right. So as we come up here, we've got this move. Price comes back in here, but fails to rebalance in here, right? We see we get that close below, showing us weakness. So the expectation then is that price is seeking liquidity lower. When you're thinking about order pairing, you think of it in the really, really simple ways of supply and demand, right? Basically, price is seeking acceptance at a higher here. Yeah, it's failed. It's come back down to find support, find an equilibrium. Say, okay, are more buyers willing to step in here? They're not. So price closes below here. Yeah, that gives us our indication that we are then bearish and that we're looking for liquidity lower. This is our original low that we'd be looking for here, or this one here. Price ultimately then breaks down. So they're the kind of very, very simple concepts that we're working with. So what I just want to spend the next kind of 15 to 30 minutes doing is, and thankfully, we've got a good suggestion here from Simon as well about checking ANKR. Let's just take a look at a brand new chart. Let's take a look at an alt. Let's take a look at the weekly, down to the daily, down to the hourly, and really look how we can kind of get involved in these. Yeah. So let's see where we are with ANKR. So as we come along here, let's maybe take a look at, let's look at our perpetual contract that we've got here on Bybit. So I like to start with the weekly chart, right? Oh, sorry, let me just check quickly. Actually, you've got a question here from Whack. That 4-hour fair value gap is also near a high time support resistance level as well. Yeah, exactly, right? So support and resistance, really, really, really important. A lot of people, some people, someone like myself who's many years ago as a student of ICT, and his original content, which I found incredibly useful, SZ as well, have been huge influences in me. People have kind of different opinions on support and resistance, whether they're areas, their levels, basically, and we can see this on this old chart here, right, in terms of how this is set up like a range, right? That was capping the market there, right? So when price came down to this level, there was also a lot of buying power, right? So when price revisits here, our expectation would be for more buyers to step in. When you see weakness like this level flips very quickly, soon becomes resistance. Now we can see as we've drawn our line in here, the same principle applies with this low that we've applied to this low. And we can see here how important this line's been. And actually, the last time I was obviously charting this asset was all the way back in 2022, right? So let's, have a look at this and draw these forward and show how that they can still have key significance. The only difference that I've had here, this little dotted line that I'm drawing across here is a midline, right? And yeah, absolutely, Marcelo. So we'll stick with two today then, guys. We will look for ANKR and BNB, all right? So I won't get bogged down on this today, but the principles of support and resistance are very, very similar to that of liquidity, right? That we're looking for key levels at which we get reactions. So what happened here? Price comes down. We get a small deviation here, right? So price tries to get back out, comes back within the range. So strong buying power. Price ultimately looks to seek liquidity higher. This we've established is the top of our range. So we get a retest of this area. We get a deviation. Again, price isn't willing to make the move. Price sells off lower, okay? Now look at the difference here with this candle. Let me just zoom in a bit for you guys as well. Price gets a strong close below, and you'll hear me use that term, right? Strong close. What I mean by that is a high volume candle, and the volume is in the body of the candle, yeah? So a big candle like this closes below, then all of a sudden we look at this area here, because we don't know at this point if this is a deviation, price is looking to climb back in the range and expand higher, right? By the way, when we use that principle, we always draw out our midline because our expectation is we go from a deviation. If we get back in the range, we're traveling to the liquidity on the far side of the range via the midline. Okay, so I'm just explaining this very quickly to show you how we can overlay these principles with the typical principles that you will hear in terms of like more of the ICT or the liquidity terminology, right? So we get this strong close below. We then look at this area here, right, for the retest. We get the retest. What do we get? We get a hammer candle, right? See this pin bar? Yeah, inverse hammer. Some people got, but basically you see the head with a very small nose, but the long tail. That's showing that the selling pressure is coming in. Now, When we start to overlay this with liquidity theory, what do we see? Remember what I said before, right? Price is going from external liquidity, yeah, which was this high here. And let me draw that in properly for you guys, actually, so we can see this nice and clear. So we've taken our external liquidity here, yeah? That was the liquidity run, that high being taken. So fine, we're saying now, price is looking to take this higher, yeah? What's it done? Drawn up into this order block, yeah? Price has now come back down, taken out this low. It's then come back up to rebalance. It's done so in the form of taking this local higher, yeah? Then when price has broken down here, we can see the displacement that's left. And what do I mean by displacement? Well, it's our old friend, the fair value gap. So what we're saying here is price tried to make a move here and it had a swing fail. That's showing weakness, right? So price has sold off lower. This expansive move lower, leaving the fair value gap, our expectation now is, if we remember rightly, we're looking for price to take an old low or high, in this case, an old low, which has been taken here. I'll draw that right across. Then, once we've taken external liquidity, we look for internal liquidity, which is here, right? Internal liquidity taken in the fair value gap, we head to external liquidity, which is this low, yeah? Now, this is where the markets can tell us with our inversions, right? So, external liquidity taken, our theory is that price would come back to rebalance this, and then the higher probability trade would be to sell lower. However, it doesn't. It closes above, right? Meaning that the state of delivery has changed, and we're now moving to look for bullish price action. So when we close above here, right, this would have been our initial target, and ultimately price then continuing to seek liquidity higher, okay? Moving from external back to internal, external to internal, okay? So hopefully that's been useful. If that was a little bit convoluted, please do watch it back and let me know. Ultimately, when we've climbed back in the range here, we're looking to expand higher. So whether you're looking at these as levels of liquidity or whether you're looking at them as support and resistance or supply and demand, the terminology doesn't really make all the difference too much. It's just what, it's how you can interpret it and then use it to make and place high probability trade setups. Okay. So for now, on the weekly, this is what we're looking at. So looking back to our principles here, what have we done? We've taken some liquidity there, which has pushed this drive higher. The key thing that draws me in here on the weekly is this fair value gap, right? So let me hide this for a second just so that it doesn't get too confusing. So we see price coming down here, right? We've seen this bearish fair value gap. Our expectation is that we set this, price comes back up to rebalance this, see it just tweaks into it here. Then remember, our expectation is that price is going to look for where? External range liquidity, yeah? So internal range liquidity, our fair value gap just gets tagged here. Price then seeks liquidity lower underneath this. Now, once we've taken the liquidity from the lows here, we're then looking for price to rebalance again. Comes back into our internal range liquidity here, yeah? And then what does it do? Sets this low, sweeps that low, yeah? Taking external, and then moves back looking for internal again. Now we've closed above this area. This becomes an inverse fair value gap. So while we were looking for that to offer resistance, we're now looking for this to offer support and for price to ultimately make an approach to the next key weekly high. All right. So we're going to take this down onto a daily scale now. And we can see what a beautiful bullish structure we've had in here. You know, as soon as we ran this here on the weekly, yeah, it allows us then to overlay and do the same thing again. Yeah. Always with the same principles, right? I'm not trying to teach you how to suck eggs, guys. I hope that's strange English saying makes sense to you. It means I'm not just going over it for the sake of it, but repetition is really, really key. Yeah. So if I'm just putting this on super quickly and we say, okay, let's just look at how price has worked here. External, back to internal, but internal failed, right? Internal failed in the form of this fair value gap, right? Which then becomes an inversion. So when we support here, what happens? We take external, price rebalances internal here, right? Then it searches for external, which it takes here. It then comes back to rebalance in here. Yeah. Now you can see order blocks. You can use back to this inversion once again, right? Or obviously when we move through the lower time frames, we'll be looking for areas and inefficiencies that price to retest. But external, internal, external, internal, external, internal. It then runs these highs here. Let me just click off of that for a second. Yeah. And then we're looking for price to move up here, rebalance, move up, slightly deeper corrective move here, right? In which case then we're saying, okay, well, if these fail, so we look at these down close candles here, acting as the order block. And what we want to see here is those support price, right? Let me just do that in blue for you, because that's how I color my order blocks, right? So ultimately, when you see this slightly deeper corrective move here, it's fine. You want to be aware of it, but remember what we're saying about watching for those daily closes. Yeah, as we see those daily, see we don't get that here. This is actually quite telltale. Again, we've got that beautiful pin bar, right? So we see the way that we get that reaction there. Yeah, that kind of long tail wick. So ultimately, what we're looking for here is we've had a market structure shift. So we're then looking, as we've taken external range liquidity here, for price to rebalance into this fair value gap, into a fair value gap that's in here, which we don't have. This is a balanced price range, but it does come back into these order blocks, and we ultimately get this rejection. Now, then when we step into these very, very bullish points of momentum, you can see by the long tail wicks here how price is just really starting to get gobbled up. So let's look at what we've done, and let's look at what we've got today, all right, rather than looking at past price action. So click that off so that stays out of the way. Here, we've taken this higher, yeah? So this was Thursday's higher. We swept that on Sunday. I'm always a little bit dubious of weekend price action, right? Obviously, the traditional markets aren't open. It can be a little bit, well, it is a lot lower volume. Emir, hello, my friend. Hello from Istanbul. Oh, I have some beautiful friends, two really, really awesome friends, both of whom I know through the industry actually that live in Istanbul. And I've never been. I have been to Turkey, which I loved, but I've not been to Istanbul. So very much welcome, my friend. Lovely to have you on the stream. So long downside tail wicks telling us there's buying pressure stepping in, and we're setting these order blocks as we start to move higher. Now, especially if we see order blocks that take liquidity, yeah, like this one, then that gives us extra validation. So really, we're now looking for this area to hold. However, as we can see, price has been in a really beautiful structure. And what I mean by that, a very healthy structure, is that you notice there's not really many gaps in here, right? Or any, in fact, we're not leaving any fair value gaps here. There's no inefficiencies. The market's just moving forward. Buyers are stepping in, underpinning it, supporting, stepping in again. So what I'm going to do here is drop ourselves down to a 4-hour. Okay, and we're just going to be looking to see, as we did with Bitcoin, okay, where could price be heading to here? This was our daily sweep of liquidity, right? So let's just draw this across. We can see that that's the level that's currently capping the market, right? Now, I want to bring in just another quick principle for you here, which is that of our premium and discount range, okay? Now, what we're looking for here, and let me just draw the sweeps in for you as well so you can see them. We're looking for lows to be taken. We obviously took this low as well. We took this immediate low here, right? That low's been swept, and we can see also that this high has been taken out. This one was as well, but we failed to correct. So when we see that, a low taken and a high taken, then we're looking at that as our dealing range, okay? So what does that mean? That means that from this low here, yeah, moving up to this higher, that makes it's just a 50% range with the top half, yeah, and the bottom half. Now, the reason the bottom half is green is because this is known as premium and discount. The top half is premium, meaning that we typically favor short setups, or we do favor short setups. The lower half here is green, meaning that it's in discount, meaning that we favor long setups, right? So in an ideal world, what would I want to see here? In an ideal world, I would want to see price drawing back to either a fair value gap, right, or an order block that sits in here. And there's two things that immediately my eye is drawn to, right? Which is why I would expect price to push up higher, but would still want to be a buyer down here because it sets me up with a much better risk profile, okay? So the first thing that we've got here is this order block. Which I'm going to do in blue. Now, when price is bullish, we expect our down close candles to support price higher. Yes, we have these ones here as well. We have this one here, which becomes valid once we close above it, yeah? Or when we trade above it. It's up to you in that respect to do your own testing and set your own rules, which you must abide by. That's not me saying that like a twat. Just you abide by them because once you've got your rules, you've got your systems, you've got your testing. When you know that, that's what gives you it gives you the confidence to execute your system, right? Because you don't need a very high win rate. It's not about being right trading. It's about being profitable, okay? So the other thing that immediately jumps out to me here is this. So remember I was telling you, we were just literally moments ago speaking about inverse fair value gaps, right? I'm just going to close this one down now on the weekly because we know that it's there, right? We've got this big area that should be offering us a really, really big level of support, but let's make the chart nice and clean. So here on the 4 hour, we've got this bullish order block. Now, this was a bearish fair value gap, this one, yeah, that sat in here, the one that I've just drawn in. So the expectation was for price to come down here and do what? Take out external range liquidity in the form of an old low. Yeah, just going to get rid of these now because we know what's made up our dealing range. I'm going to leave that one because that's clearly capping the market. What I mean by that is price is trying to get past this but keeps getting rejected. So we swept external. The plan was if we stay in line with our current thinking that price returns to internal, which is this fair value gap, because that was a bearish fair value gap at the time, and then rejects lower. However, we didn't get that, did we? What actually happened was price came back to this. We got an initial rejection, but then look what happened with this candle. This candle right here, yeah, that one closed above this fair value gap, which is why it's now purple and what we would call an inversion or an inverse fair value gap. That we now expect to offer support, all right? The other thing that we want to look at here as well is the fact that we've got an order block sat in here. So when we took out this high, yeah, and we swept this low, our dealing range took this shape. Because we didn't have any of this price action here, right? So that's where price was at that moment in time. So we had our high, our low, and this makes up our dealing range. Let me just make that so that's spot on. So remember what we're saying. We're looking to be buyers from the green box and sellers from the red, yeah? That doesn't mean that if we're bullish, we're not just going to blindly short here, but what we're looking for are areas and corrective moves we can get in on lower time frames. So I'd be watching that level with great interest. But you see this candle closes above, right? So you see how it's just dipped down in here. See the opportunities, yeah, that you can get when price returns to this area. Ultimately now, this becomes our initial target with this high being looked to be swept. Now, when we engage with these, right, like we can see here, see price got above and just started to sell off. That's because there's old stop losses above here, right? So old stop losses, you have algorithms that will kick in, you have breakout traders, right? So these are obviously good take profit areas, but they're also areas that larger accounts can target for reversals, right? Now, typically you're looking for your clear and obvious highs and lows, right? But that's why we want to be cautious there. Now, this being a 4-hour candle, yeah, so this was what? Okay, this was Saturday. Like I said, I don't particularly like to trade on a Saturday. However, that doesn't mean that we don't get setups, right? So now on the high time frame, you'd be thinking, why the heck would this guy be looking to short anything, right? And actually, do you know what? I completely understand. I'm not saying that I would. Well, I would actually, but I just want to explain the logic behind it. So I'm trying to get involved in these, call them micro moves, if you like, under using the same principles, right? So I've got my key high time frame level here. We notice we're up here in the red box. I'm within my New York AM trading session, which is here. Yeah. What's happened is price comes up, has taken out this high. Now, what do I need to see in here, right, to convince me for price to go lower? All I'm looking for is exactly the same things, right? So here's my target. Why? Because that's the key swing low. So let me just draw this in. Price runs the highs here, takes out all of this liquidity, and then runs our high time frame target. Now, we're not saying that we're expecting price to reverse and drop into oblivion here, but I am saying that to keep the trend healthy, we're looking for some kind of corrective move, okay? So what we would look for is exactly the same as we were talking about previously, right? So we have our fair value gap here. Our expectation is for price to rebalance this and then attack external liquidity higher. It closes through here, right? When we get that close below, see this black candle here, that becomes an inverse fair value gap. The expectation now is for price to seek liquidity lower, right? And this is the target. This is the area that I want to target. So I've got two options here. I could enter on the close of the candle here, right? So you would have to use a market entry, meaning that, you can always be at risk of slippage here as price moves lower. But let's just say, let's take a, not worst case, but let's say we'll take it at the body close, yeah? So we enter here, our stops would be above here, and then our target would be here. We want to see at least a 1.5R trade, okay? We can see that that worked out quite well. Now, if we're looking to draw this down to lower time frames, yeah, then how you can help refine this, and I'm just going to leave that over there just so that we can see it, right? And let me lock it. Now, once we've got the validation here that we've closed underneath this 5-minute inverse fair value gap, right? What we can look for are for sweeps and breakdown patterns. So we see we engage with liquidity here, and then we shift structure here, or not shift structure, but we have displacement here, leaving our fair value gap, meaning that then we would look to be entering on this FVG, yeah, stops above that high, targeting this low. And what we can see here as we drop onto a lower time frame is this one affords us a 2.14 risk to reward, where this one affords us a 1.55. Okay, it depends very much how comfortable you are trading on different time frames and lower time frames. The other thing you need to remember as well is when you're dealing with these kind of percentages, this is like a 1.25% move, meaning you've got a 0.58% stop loss, right? What you want to do in situations like that, let me let me show you with this actually. Very, very good friend of mine and fellow trader that works alongside me at the Bird Nest, a chap called Resume, made this awesome position size calculator, right? So my entries here, stop losses here, my take profits here. There's a little black box that pops up down the bottom here. And if I want my risk to be set at $20, meaning if I lose this trade, I use $20 plus fees in here, yeah, then it means that I'm making $43. Now, that's brilliant, okay? Awesome. That's what we want to make. However, we also want to be aware of our position size. Our position size to make that trade is 3,481, yeah? Meaning that we could be looking, $3 to $5 in fees, yeah? Worst case scenario, depends on your trade, depends on your brokerage, but always check your fees. That's why low time frame scalping needs a lot of consideration, right? And intraday trading, because you've got to make sure that you've got the percentages there, all right? So let's go back here, get replay off, and then we're just going to spend the last kind of 10 minutes taking a look at what we think price is going to do now, all right? So I hope that was useful for everyone anyway, and just in terms of how we'd kind of be looking to trade that, or certainly how I would be looking to trade that anyway. Let's just see what we got in the questions here as well. Simon, great analysis, mate. Thank you. I'm in pair with BTC. However, intention is the same. I'm thinking about a little correction before we go up. Yeah, I think so. So for me, if we just look back at this, right, the 4 hour, I think the 4 hour has been really, really good here as well, right? I think it's been really, when we look at the structure, where we've had this bullishness, right? If we look, just going back to the daily very quickly, we can just see how beautiful this structure is, right? Working its way up. Now, ultimately, I think price has just attacked all these highs here, this cluster of liquidity, right? So we can see if we kind of draw our line, which I'll just do really quickly, just on that top one there. And it's funny how when you look at these levels, you can see how people look at the concepts of support and resistance, right? So I've drawn that without seeing any of that price action there. But for me, it's quite a it's quite an interesting level, quite an obvious level, because look, resistance, 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 resistance. These areas love to get run. Yeah. Also, then when we look back, we can see, look, support all the way through here, buyers stepping in. And then when you go back even further, look at this, support, support, support. Big close through, remember? Strong close, like I call it. I don't know if that's kind of made that term up years ago. I'm not sure. Hopefully it highlights the idea of it. But the principle is that it's all to do with the body. See these wicks, these buyers stepping in here. Right? This is a big expansive move lower with displacement, meaning we've left a fair value gap. What's our expectation? We've taken external liquidity. Price comes back for internal liquidity before seeking external again. All right. And then in the same vein, I won't just keep going through it, but that's the kind of principle. So while we're up here, look, it's very, very difficult sometimes because you want to jump on board with these trades, right? And you see everything kind of popping off and it's really difficult not to get FOMO. But for me, I'm just saying, okay, look, at the moment, I just want to play the health in the trend. It's obviously bullish, but do I want to be a buyer up here when we're running into potentially what could be a lot of resistance, right? Or do I want to wait for the market to tell me something, to give me an indication of where it wants to go? Yeah. So as I'm looking in, I'm saying to myself, okay, here we are on the H4. Price has come up. What do? We've taken some lows here, taken some highs. So if we were looking at this as our premium discount range again, yeah, we can see price just showing so much strength at the moment. It's come back into this order block, right, to take off, but it's not come back down into discount to give us those longing opportunities. So for me at the moment, I'm definitely showing caution. Nip, my man, good to see you. Oh, Greggy as well. Good morning. Good morning. Sorry, mate, is that to look at Algorand or the algorithmic trading system at the Nest? Literally, if it's for Algo, mate, I will try and pop on there very quickly in a moment. But we did just say, Erica, there she is. How are you doing, my friend? Erica, very long-term friend of the stream. Awesome to see you. Hope you had a nice weekend, bud. Also, now we've got more people on here as well. Has anyone heard from Kelly? I'm getting worried about her, but I do just really hope she's having just an awesome holiday somewhere. If anyone deserves a break, it's her. Kelly's a good, really, really good lifelong fan, or not a fan, but a patron of the stream. Tunes in all the way from New Zealand at like silly o'clock in the morning. We love her to bits, as we do all of our participants. So very much welcome if you're new here, and obviously for all you legends that come on every week. I hope you know how much I respect and love you guys for doing so. So basically, long and short, before I get too waffly, this for me is resistance. I would like to see us in a traditional sense, kind of strong move above here, yeah, and then start to have some kind of consolidation here, sweep, build this as a platform. This would obviously be on a lower time frame, right? Using this level here, yeah, to build some kind of stability, looking for our inefficiency in this move above it, then I would consider being a buyer in here under the premise that we could potentially have a new premium discount range between, say, like here and here. Right, so when we get this initial move below, that allows us to be a buyer into here, and then our expansion leg here, right, we would just want to make sure that we did it in a way that we were buyers from the green box. All right, so that's what I'd be looking at the moment for on ANKR. Been away on holidays. Oh, awesome. Yeah, no, I'm doing well, thank you, Nick. Great to hear that you've been away on holidays. Awesome, awesome, awesome. And Erica as well, lovely to have you on here. So I did say B&B was the other one, wasn't I? So let's do a really quick top down on B&B, and then Gregory, if that's... Oh, God, yeah, no, saying about the eyes. Yeah, terrible thing for Burb and the team. Been over in Hong Kong, which they've had a wonderful time, by the way, not to speak ill of Hong Kong, but unfortunately one of the events out there had been using some incorrect lighting that was pumped full of UV. Lots of people were temporarily blinded and all kinds of craziness. But yeah, thank you very much for your concern, mate. I'll pass it on to Burb, but he's recovering. He was in the hospital last night and yeah, feeling a lot better today. And I think actually... for our friend on here from Istanbul, he's getting ready to travel to Istanbul to speak over there. So let's very quickly look at B&B. Everything's having a nice pump at the moment. Yeah, B&B is probably a little bit conservative in some respects, I suppose, but right. So On a weekly scale, what are we looking at here? Well, actually, I think this thing could probably pop a little bit higher here. It's failed to run that yet. So that would be a key point of interest for me. I think when we're looking there, we can also obviously see this big inefficiency here, this fair value gap, right? So draw that in really quickly. That for me will definitely be drawing price higher. So that's like our draw on liquidity. You'll see it written out as DOL quite often. Thank you, Gregory. Was it Algorand you wanted to take a look at? Was it, my friend? If so, I'll just I'll tag that on the end for everyone. But I'm literally just going to do these super quick, so as to not bore you all too much. Right. So draw on liquidity up, liquidity here on a weekly scale. This is where I'd be targeting if I was a larger account. This swing higher, and then ultimately this one above it. So let's just clear that up for a second and drop down to our daily chart. So again, we can see here on the daily, see this level drawing up is also relative equal highs here as well, right? And the other thing that I'd be looking at here as well is this up close candle that we have. And now why have I picked this one? Well, this one's swept liquidity, so this is a key level. I think we can also all agree here that if we kind of draw a line across here, yeah, or maybe even a little bit lower to kind of this region, we can see price finding support. Again, that big expansive move lower. Again, I was talking about leaving that fair value gap, retested, sold off, resistance, 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 right? This becomes a high probability order block because we've taken liquidity above these highs. They were relative equal highs as well. We can also see when we broke down here, resistance, back to the old low, resistance, back to the old low, resistance. Finally, kind of some point of acceptance that it is weak. It does need to trade lower. Ultimately, we get that big sell-off. So this becomes a really key area of interest for me here as well. Now, again, it's really, really difficult. You need to know your time frames, the way that you're looking to trade this, right? For me, I would do on an intraday basis, be looking to short this on a lower time frame for that corrective move back down, right? What we do have here on the daily that we can see is this order block here. Yeah, we've got this fair value gap here as well. I'd be nice to see price have a healthy correction down, hold this area, and then look to travel up further. Obviously, price can do whatever it wants. It can smash through this and continue to go to the moon, especially, because of the bullish market conditions at the moment. We just need to pop this on to see as we go higher that the dollar index is dropping and equity markets are up. That's normally a really, really good sign for risk on assets like cryptocurrency. So if we now drop down to our 4-hour chart as well, let's see if that gives us any kind of indication. Well, something that can help here, what we can see is really nice. These are the kind of healthy moves we want to see the market making, right? We see this big expensive move higher. Fine, I would have liked to have seen a deeper correction down into here, but sometimes you just don't get it, especially with crypto when it runs really hot. This is currently offering support. We can see these order blocks here. If we make an allowance for these, and especially the bodies as well, where the volume of trading takes place. This at the moment is what is supporting price on its move higher. So as we move back into here, this is still resistance until proven otherwise. But it's all to do with context and time frames, right? Because if we move up higher here, do something like this, yeah, and then we get back down below this, then we can look for these kind of breakdown moves, look for this to be retested, right? Which looks a bit mental on there, but as we start to drop that down onto a 5-minute chart, we can see that we're now moving into, and you'll have to forgive, obviously that's going to look ridiculous on a 5-minute chart, but we can see we've had this expansive move higher. Our theory and our principle doesn't change, right? Now, if I'm looking at this here and saying, well, maybe we get a corrective move here because we've now taken out this high, yeah? So something that I like to do here is pop on session breaks, which just shows our day dividers, which we click on here. So we can see here, this is Asia's high. So the Asia trading session that took place here and London as well. Asia's high. And what I love about this here is we moved into London, yeah, is that we've come in and we've taken the session lows here as well. So we can see how price is moving from liquidity to liquidity. Now, while we're up here, what we could look at is saying, okay, well, If we expect a drawback and then price to expand higher, then I'd be looking at it like this. If I'm doing it on a very low time frame, I'd be looking at this low here that swept that previous low as being a dealing range and saying, okay, well, is there any room for me to scalp into here? Or if you don't want to counter trend trade, yeah, and rightly so, the trend is your friend until the end. Let's monitor what these are doing, right? So here's our bullish order block, our bullish fair value gap, right? So this should hold for price to continue higher. Closing below here, we're looking for these order blocks and inefficiencies down here, yeah, in discount, where we can look to get long and come back to attack this higher, all right? And let me have a look. Mr. J5, thank you very much, mate. It's very kind of you. Marcello, you're very, very welcome. Hopefully that kind of gives you a little bit of insight. If you're not someone that really likes to dive down deeper into those kind of lower time frames, then again, all we're doing is looking at our high time frame setups. And in this case here, we would then be looking and saying, okay, we've got this that you could consider your dealing range here. We've taken these lows here, relative equal lows, drawn into them, expanded higher. Now, technically, you have a smaller dealing range here as well, right? So you've taken the lows from that and then taken those highs. Either way, I think for me, if we're looking at this on a 15-minute, what would be a really lovely move here would be for price to draw back into these order blocks, right? We also have this, yeah? We know we're in the body of this high time frame order block. So we've got this double layer of support here. Let me just draw this in blue. So on a 15-minute timescale, seeing price come down into here, some kind of nice move like this would be ideal, and I'll just explain quickly why. Do that in green. Right, so price draws down here into a discount, meaning that we favor our long setups. We can then look for a sweep of liquidity, a shift of structure, yeah, which is this break here. And then we would look for an order block or ideally a fair value gap in here, allowing us to be buyers at the retest of this. We've got clear invalidation where our stop loss can go underneath this low, right? Because if our theory is correct and price is now moving into a buy program, price shouldn't come back down below this low. And we've got a ready-made target here for a beautiful 3R trade, right? That's how I would be looking to get on board with this. However, we do need to appreciate that we're coming into a key area of resistance. We have had a lot of upwards momentum. So if we do correct and we do start to move lower, we just need to know that those long setups at the moment are a little bit lower probability, right? Because we've had such an expansive move higher. When we always want to retain our high time frame perspective, right? So as we draw out, we can see all of this bullishness moving up. Does this mean that price can't continue to move up? Of course it doesn't, but let's just look at it in the opposite direction, right? When price was really moving lower. Price started to move down here. We had this structure, right? But see how price very rarely just drops like a stone. Fine, it did here, right? Just drop. But here, retest, consolidates, starts chasing down the lows. Yeah, external back to internal, external to internal. Then when we look at it and we monitor things like our key order blocks, remember, look for things like order blocks at key levels. By that, I mean levels that have swept liquidity, right? Then you can always see when you're looking at this, how strong and how fiercely that's offered resistance, right? So this was formed back in mid-July and price hasn't broken above it since, yeah? So for me, while we're looking at this, we want to be looking at it with caution. I think there's a lot of bullishness in the space at the moment. I'm super bullish crypto at the moment myself. But in terms of looking at this from an intraday perspective, I'm saying, okay, where can we potentially get this corrective move lower to attack this? Once we've attacked this here, I wouldn't be considering long setups, right? So let me just zoom in a bit to just show that line a bit clearer, right? Once we've engaged this. If we fail to engage with that and we get this pullback, I'd be happy to look for a long into this area. I'd probably reduce my position size a little bit because we're quite currently overextended. But the reason I'd be looking for that is because I believe that that's the area that would be targeted by larger accounts, right? To push the price up here, people will start, you get breakout traders, you get stop losses engaged. Why? Because people from the original move down that we've got this high time frame level for, there will be stop losses above them. If they're triggered, they'll be triggered in the form of a market buy order, meaning that what you do is you create this huge liquidity pool of buy orders up here, which we'll do in green, meaning that when big accounts get to dip into that, right? And a lot of other people start to maybe FOMO in a bit late. A lot of retail traders will see this as a flip of support, of resistance to support. It allows big accounts to get huge positions filled here and take the other side of that, meaning that they then fill all their sell orders with those market buy orders, and ultimately leads to price reversing. All right. Now, that can just be an interim corrective move. It could be a deeper move lower. All we're doing is looking for these signatures in price so we can get in on the lower time frames and have a little nibble. All right. So, look, I hope that's been good today, guys. I know it's still rattled on for about 50 minutes. I will try and reduce that down by about 10, 15 minutes if I can, and still do a longer one. But really excited to bring this to you. I'm going to be live every day this week, Monday to Thursday. So if you've got altcoins that you want to look at, if you've got traditional market assets, FX, everything, I'll actually be trying to throw one, maybe two live trading sessions in there as well, where I'm going to share my TA. We're going to do all the top downs, get onto the low time frames, look at some scalping trades, look at some day trade setups together. So please do let me know if you've got any feedback about that. It's going to be every day, apart from Thursday. I think it's going to be an hour earlier, but if not, we're going to be running them at midday UTC. We've got our free trading congress coming up in 9 days now. We've got some of the best speakers in the whole space. Everything's free. You can find the sign-up information in the description below. All you have to do is pre-register. There are webinars every day. There's prize giveaways. There's trading workshops. We've got some of the best and biggest names in the industry. Some of the top people from some of the top centralized and decentralized exchanges, some of the best trading names out there, people operating on levels with Bloomberg and stuff like that. There's so much market information, and it's all absolutely free. Okay, it was ALGO. Okay, no, I did say that. Okay, so look, let's just rip a really quick 2-minute top down on ALGO for our friend O'Gregory, yeah? So, where have we got it? Here we go, Algorand. Right, so, are you welcome, Marcelo? No, and I did promise you that. I have not forgotten. I just didn't know if so. We have a trading algorithm, which, if you're a member of the Bird Nest, you get access to our trading algorithm known as the MBS system, built by a wonderful human being called Pedma 7. So, where are we at the moment? We can pick these highs or these highs. I'd probably focus on these because we've just run them. Right, so we're drawing up into those. Again, we can see there's a little bit of an extension here. Price has had 3 really, really, well, this is this week, right, but 2 hugely bullish weeks. So that doesn't tell us a ton. This is a little bit more telling for me, the fact that we've engaged with this high time frame level now. So looking at this, took out these relative equal highs. Now, one thing here that we're looking at is the immense amount of strength that's been shown here. See those? Right, equal highs, almost to the dollar, or certainly not far off. We look at that in the form of like engineered liquidity, right? Or anywhere where you get kind of like a series of highs. You see these? See, this high didn't take this one. This one didn't take this one. This one didn't take that one. What does that make them? Huge targets, yeah? It means that there's lots of potential liquidity there that can be run. And that's what price really, really loves to do. So we had the same here, yeah? This high, yeah, that high wasn't taken by that one wasn't taken by that one. When price did reverse here, yeah, as we see it do so here, amazing how it uses these highs as support, taps into them, attacks this one, comes back down, attacks this one, and it's just really kind of flying higher. Now we see with these equal highs here, we did the same. That drew price higher, now using that as support, and it's pushing up to here. So just make that green to show that that's really kind of an area that we're outlining here as an area of support. I'm going to drop this down onto the 4 hour now and just see if we've got a little bit more information, right? So we can see here, we've run into this. Yeah, as we said, that's our key high, our higher time frame high that we're looking for, right? So now we can see where this big expanse higher. Now, I think that's going to encourage a lot of people to really dive in here and really throw themselves in. And I think that's where it can be dangerous. Yes, this thing can absolutely pop. Of course it can. But let's kind of look what we had here. We had a consolidation, a little bit longer than that, but very similar to what we had here. Then you see this big pop we had with this candle here. Loads of people jumped on board here. Price ultimately dragged right back to just annihilate some of those stop losses existing below these lows before it then took off in that actual movement. Now, I'm not saying that's exactly what's going to happen today, but what I am saying is we can at least look on some lower timeframes to see if we can get any kind of ideas here. So let's do a premium discount range here on our hourly. By the way, is a triple system. If I'm trading the 5 minute, I like to use the daily, the hourly, and then the 5 minute to execute. So we took this low down here. We've taken this high up here. So if I'm looking at this as our current dealing range, then what I'd love to see is price kind of come down and target this area here. So I'd be looking at this here if we do get that corrective move lower, yeah, I'd be looking at this fair value gap starts around about 0.1236. Yeah, if price gets this correction down into here once again, we would look for this here, right? And then we would just look for price on the lower time frames to give us a little signature like this. And then attack the highs that it's left behind. Again, we would be looking for a sweep of liquidity here, a structure shift here, price to find some kind of fair value gap in here. Yeah, and then we look to move away. Similar, again, I know this was weekend trading, right? But just to kind of show you, similar to what we did here, swept the higher. We then look for price to do what? Come back down, right? This is our displacement leg, the move higher. So we use that as our premium discount as well. Price, we're looking to draw back down into here. Where does it draw into? Not coincidental, in my opinion anyway, the fair value gap that sat down in discount. Yeah, long from discount, moves higher. Just looking for the same kind of thing here. So the trend can retain its bullish strength, but also its structure. All right, guys, look, thanks so much for joining in today. Had some really, really great amounts of people on here as well. Some really beautiful old faces and some wonderful new faces as well. I hope it's been valuable for you. I am going to be back live tomorrow at midday UTC again, so we can smash back into this and let's see. We'll keep these on here. We'll keep an eye on ALGO, BNB, ANKR. Do come and tag me on Twitter or that. If you have got any trade setups you're looking at, and also any ideas for the streams for the rest of the week. Like I said, we're going to do 4 back-to-back and get this real good build-up ready for Congress. All right, guys, thanks so much for tuning in today. Big love to all of you. I will see you tomorrow at midday UTC.